Welcome, everybody, to our Leaders in Housing Counseling call. Glad to have you here today. We are really moving forward on lots of valuable things, and today is going to be a discussion about some of the newer technology that may be helpful to your work. So we really want to dive in and get to the topics at hand. So do you want to open us up, Ebony?
Yes, sir. Good morning and afternoon, everyone. Welcome to our Leaders in Housing Counseling webinar. Today is Thursday, June 23rd, 2022. My name is Ebony Cartwright. I am the Administrative Manager here at NHRC, and I will be the navigator for today. Before we jump into our webinar, there are just a few things that we want to go over. Just a few housekeeping items. We want to know where you're watching from. So if you can, in the chat box, put in your city and state and what organization you belong to. We'd love to see where you are watching from. Also, please note that this webinar is being recorded, and a copy of this webinar will be sent out within 24 hours of this webinar. A copy of the PowerPoint presentation will be posted within the chat box of this presentation throughout the presentation. So if you want to have a copy of the presentation, you can simply click on it and you'll have a copy. Closed captioning has been enabled for this webinar. If you want to see the closed captioning, just toggle your mouse down at the bottom of your screen and click on the CC box, and closed captioning will show. If by chance you have any questions, you can add your question to the Q&A box for this webinar and not the chat box. Please put all questions in the Q&A box and not the chat box. All right, so that's it for me so far. So I'm going to hand it back over to Bruce and he'll take it from here.
Excellent, Ebony. Okay, well, so today's agenda. Well, first thing, we'll talk a little bit more about this, but in the first week of August, NHRC is going to be 10 years old. So for those of you that were there in the beginning, and I know there's a few of you out there, you know, we're all still hanging in. It's been quite a ride. So we'll talk about some plans here, and Ebony and Eric and Ellie and Christy have been hard at work on trying to think about how to do this. We'd love your input as well. So we'll talk briefly about that, and then we'll do our quick updates. So the latest from what's happening in Capitol Hill and our work with Congress from Christy. Eric's been doing outreach work. We want to really zone in on that. It's valuable for the whole industry. And Ellie will give updates on NHRC. And really the bulk of the call will be with Indysoft and their latest integration here, which is basically a document sharing tool that could be used aggressively by housing counseling groups. So that's what we'll spend most of our call on. Please be sure to use the Q&A box for putting your questions in. Aggressively question. There's no problem there, and it's very helpful to keep everything on top of what's most relevant for everybody. And then we'll do a quick reminder about renewing your membership dues, and then we'll make a plug at the end on our call next week, which will be around ADUs, which are really kind of a growing, emerging technology in our in housing and affordability, and we really want housing counselors to be pretty familiar with how this all works. So with that, let's get started. And first thing on our list is the NHRC 10th anniversary. So we technically started August 7th, 2012. We really kind of got the wheels starting to turn in January, February of 2012, but the actual project that formally got recognized at Tide Center, which is the foundation that houses us and is our fiscal sponsor, that all happened August 7th. but we were pretty active in the spring all the way through. So, and a number of you have been active from day one, and a few people have retired and out of the field. But it's been quite a journey, and we've had a chance to accomplish a lot of things. We've got a bunch of things we still want to get across the finish line. There's always work to do. But I wanted to just let, I know Ebony and Eric have been doing some thinking about all this, so let me turn it over to them about how they think, I think you can participate.
Thanks, Bruce. So as he mentioned, this year NHRC will be 10 years old, and we are inviting all of you to help us celebrate this 10-year anniversary. So there's a few things that we have in place that we're going to implement in order to allow you to help us celebrate. And the first one would be a video greeting. We're going to be sending out invitations, and the link to submit a video greeting will also be added to the chat box of this webinar. But you guys can feel free to submit a 2-minute video greeting, just congratulating NHRC on the 10-year anniversary. We would absolutely love to hear from each and every one of you. And if you had done any work with us, just submit a video just telling us about your experience and working along with us. Also, if you have worked with us in the past and you just have some pictures that you would like to share, you can also submit your pictures through the link that will be added in the chat box. And as far as the membership drive, what we're going to do is from August 2022 to August to 2023, if you renew your membership with NHRC, you will be sent a 10-year anniversary commemorative mug. So please renew your membership with us within the next year, and you'll get this fabulous mug that we're going to have created for all of you to receive. And so just please note, an email will be sent out in regards to our 10-year anniversary, just in case you missed anything that I said today. And then you can always go back and watch the playback on this video. So thank you so much. And I hope that each and every one of you will take the time to help us celebrate this 10-year anniversary. Thank you.
I mean, so the video can be really fun. So you could give us something that you thought was really significant, one of the White House meetings, or negotiating with servicers back in the day, all those kinds of things. If you want to reference any events that you've done, that would be great. Ebony and Eric will put together some kind of a presentation or ways that people will be able to access these, and we'll kind of, I hope, weave them into some of the things we're doing. We'll have a special leaders call in August, so we'll do stuff like that. The other thing is that the anniversary mug, limited edition, will be available in August, not just to renewals, but there's a few of you who haven't joined yet, a few of your organizations. We need you all on board, so you'll be available to get those as well. And I understand that there's a few of the orange mugs, the Leaders in Housing Counseling mugs, left that we might be able to share with early adopters. So getting in early would be great. So let us know if you haven't joined. We really want to get you in as well. Okay. So thanks so much for that. There'll be plenty more coming up. So let's go to Christy, and I understand there's some news happening.
Hi, everyone. My name is Christy Villalobos-Hauser. I'm the Housing Policy Director at the National Housing Resource Center. Thank you for joining us. So first, on FY 2023 appropriations, today the House will have their subcommittee markup for the Transportation, Housing, and Urban Development and related agencies budget proposal for 2023 at 4 o'clock. The latest proposed draft from the House provide $70 million towards the HUD's Housing Counseling Assistance Program. And this funding level is higher than the president's proposed funding level. So that's good news. And then the House has their full committee markup next week to determine the final funding levels for all programs. As far as the Senate, they are in a slower pace. We have heard that they are still negotiating on the cap for spending of programs. So we are eager to hear from them, but we might not know more on their proposal until after July once they've negotiated that. And we will be meeting with appropriators on the Senate side to ensure and remind them that they supported the Dear Colleague letter in support of the $100 million towards HUD's Housing Counseling Assistance Program. So we are hoping that they do release a draft of the budget, but if they don't before October 1st, then we are expecting a continuing resolution, and depending on what happens in November, Republicans may even have another continuing resolution in place. So yeah, that's what's happening with appropriations. But for budget reconciliation, negotiations have restarted again between Senator Manchin, Senator Schumer, and the White House. We've heard that they're working on a framework for the budget reconciliation package. We are expecting a $1 billion package. Half would go towards direct spending and the remaining half would go towards other programs. So Senator Manchin has said that any reconciliation package, he wants to increase the revenue by changing the tax code to raise taxes among top earners. And also he wants to use that raised revenue to address inflation and climate change, as well as to reduce the federal deficit. A budget reconciliation bill requires a simple majority of 50 votes as opposed to regular order of 60 votes. So the budget reconciliation is the most viable path for robust housing investments. Some advocates believe that 4th of July is the last feasible deadline for a budget reconciliation package, because that would give Congress a whole month to turn that agreement into text before the August recess. However, there have been reports that some Democrats are now considering the start of the August recess, August 8th, as the new deadline, and that would give them the full month of August to turn that agreement into text right before Labor Day. And so I will keep you updated on the developments of that next time. In case the budget reconciliation package isn't fully agreed on and nothing happens there, we are advocating for legislation that supports the production of housing increasing and also down payment assistance. So the first bill that I've had added to the slide is the Neighborhood Homes Investment Act. So this would revitalize distressed homes in urban, suburban, and rural neighborhoods by creating a federal tax credit to incentivize private investors to build and rehabilitate 500,000 affordable homes over the span of 10 years. So the other bill that is also on the slide is the Down Payment Towards Equity Act. Thank you so much to all the organizations that signed on to our letter of general support for this bill. It's been sent to the House Committee on Financial Services. They've received it, and yesterday they had their markup of this bill. It passed, and now it's going to the floor. It hasn't been added to the calendar, but when it does get added to the calendar, I will notify you of any progress on this. So yeah, and then next I want to mention the last bill, but not least, Educator Down Payment Act of 2021. So this would actually be it was introduced into the House Education and Labor Committee today. This bill would direct the Secretary of Education to award grants to provide financial assistance to educators as well as staff at schools to ensure that they have down payment assistance for homes. We worked with Representative Swalwell's office to ensure that 5% of the funding is goes towards housing counseling assistance in this bill, and we will keep you posted on the progress of this bill. This is really important for teachers to helping the teacher retention rate. Nearly 50% of new teachers leave their profession within the first 5 years. So hopefully this bill will incentivize public educators and staff to stay on board. So yeah, I will keep you updated on all of this next time. Thank you so much.
Excellent. Thank you so much. So next we want to talk, have Eric Moore join us. So Eric is our outreach coordinator, who's our newest member of staff. We're really glad to have him, and he's doing some great work on outreach for us, and especially in the in creating a better pipeline of housing counselors to join our field. So Eric, what have you got?
Good afternoon, everyone. My name is Eric Moore, and I'm the new outreach coordinator for NHRC. I've spearheaded the Career Pathways Initiative. This initiative is to grow the interest of recent graduates, individuals who are seeking to change careers, and individuals who will soon graduate. With that, I've reached out to Cheyney University, and we will host an informational session on September 6th. They've advertised this to about 600 of their students and also their alumni within the last 5 years. In addition to that, I'll attend their Career Expo in October on the 12th. And that's all I have for outreach updates. Thank you.
Good. And, and maybe some of you can be helpful on all this. We're trying to find opportunities where people might be prospective housing counselor recruits who don't know about the field yet. So if you have ties to a university, and especially an alumni university, we're very interested. If you've got people coming out of the military and you've got a relationship with groups that service people coming out of the military that might be looking for jobs, that might, we would love to make pitches to them. People coming out of AmeriCorps. It's the whole range of opportunities out there. We would really like to start getting housing counseling as a career to be put out in front of populations, and not just young people. We'd like to aim at people who are looking for a second career or alumni. So any thoughts you've got about that, get them to Eric and to Ellie, and we're very interested in increasing the available pool of people who could become housing counselors, so that more people are able to do the good work that you do. Good. And Eric's email and Ellie's email will be on the final slide on our programming today. Okay. So, and then next, let's move on to Ellie, who has some updates as well on things you should know.
Hi, everybody. And I just want to point out that Gabriela Munoz just put into the chat that she actually found her career as a housing counselor after being in AmeriCorps. So we'll have to keep that in mind, Gabriela. We may call on you. So I just want to do a few quick updates. There's not a whole lot to say about the Homeowner Assistance Fund. Really, this is more, I left this here as a reminder to all of you. If you are involved in the Homeowner Assistance Fund in your state and you're interested in being part of the group of advocates that meet on a monthly basis to kind of talk about and review what's going on and what are issues and what's working and what's not working and so on, give me send me an email and I'll get you added to the listserv. There are regular emails that come out when things that are important for you to know about are published. And then again, you can be part of the monthly call where we talk about different updates and things that are going on. It is my understanding that all states have now got an approved plan. And I think that the territories are, the tribal plans are not all the way fully approved yet, but those are being worked on now. There are new escalation contacts available. So CFPB has been giving me pretty regular updates. So now there is an escalation contact for Caliber and Nhrc. And you'll note that it is the same person. So apparently Caliber and Nhrc have merged, and it's the same servicing entity. And then there are some updates for Ocwen. There was a phone number that was an incorrect phone number. So be sure that you check the link for that. And I think that the link will be put into the chat box. And every webinar, I have to make sure that I remind everybody about our job board. You can put your open jobs there for that are in your housing counseling program. And also, if you're interested or you have friends who are interested in applying for a housing counseling job, you can see what's open, and you can also post your resume there. And with that, I am going to hand it over to Bruce to get the main part of our event started.
Excellent. And I will just also say that if you hadn't heard already, Ellie was able to get a contact for SBS. So they're one of the more difficult servicers, I think we keep hearing, and I learned that everybody knows that. So that's definitely on the chart as well. And if you have any problems with servicers not doing what they're supposed to do, if the escalation contacts aren't working the way we need them to, please let Ellie know, because we do really want to follow up with servicers and get them to do the right thing here. Excellent. Well, so with that, let's go to the main topic. And so many of you who worked through the foreclosure crisis had the experience of working with Hope LoanPort as a document sharing program. Indysoft was was behind that and did lots of the work on that. And they've come back with a new product, I think aimed more at today's environment. And so we've got Cam Melchior, who has a long history of working in the field, both with lenders and with housing counseling agencies. And we wanted to get the lowdown of how it works and who it is available and who's participating on it and how we can use it and how it can strengthen our work. So with that, let me turn it over to Cam. Welcome.
Bruce, thank you very much. And let me congratulate you on the 10-year anniversary. I didn't realize that. I guess the most important question is, Bruce, how do I get my hands on an orange mug? So
organizational membership. So
I love a businessman.
All right.
Seriously though, Bruce, you guys have done fantastic work. I've worked with you in the past, and I'm excited to see you guys hit this milestone and continue success. All right. As we are at my first slide, first of all, thank everyone. I want to thank everyone for joining the meeting today. And I'm going to try to be laser focused on what this platform is supporting. I think, as Bruce mentioned, it is a modern version of the Hope LoanPort platform, but certainly expanded with different types of initiatives being supported by this, but both under our mission, which is to assist the industry to preserve and expand homeownership. We rebranded the platform as the National Housing Advocacy Platform, when indicating more of a collaborative model among the advocacy sector and the commercial lenders and mortgage companies, and also investors. As you'll see, we're doing work with them as well. Next slide, please. So here is a general description of what the platform supports. Again, the key to remember is that it is a collaborative technology, which is a way to provide interaction among a variety of stakeholders. And yes, sharing documents is a component, but it also has various business rules, milestones, and workflows depending on the type of transaction it is supporting. I'll go over that a little bit on the next slide. But the key here is also that it becomes very cost effective for all the participants. There's a lot of regulatory compliance built into the technology that will help servicers and lenders, particularly with Reg X and CFPB on the servicing side, and a lot of the origination compliance issues that they confront when they're lending money. One of the features is that by having a kind of a standard piece of middleware, if you will, this democratizes access to these commercial entities on the other side of the platform. So if you're a small community-based HCA, if you have a web browser, you can be doing business with Caliber or Wells Fargo or PNC. And depending on the type of transaction that needs the homeowner, the housing counselor assistance, you'd be actually linked to that particular transaction. And if it's a fee service, the fees would be passed through to the housing counselor. And in many cases, we act as a prime contractor, again, which alleviates barriers to entry, because it's very difficult in many cases for housing counselors to get those third-party technology approvals. I mentioned that in the last bullet point. This is a very important component that in order for us to do the work for the lenders and servicers, we have very high thresholds for meeting their third-party technology requirements. As all of you know, the vendor management, third-party, and fourth-party compliance rules have just skyrocketed. The infrastructure we have to support that maintains privacy, performance of the application, uptime, disaster recovery, it's getting more expensive, and the risk associated with those are at the highest level that I've seen in my 25 years in the industry. Next slide. So here's kind of a 20,000-foot view of this collaborative platform. And as you can see, if you go, let's start up in the right-hand quadrant, there's the counselor portal. Now that's really our HUD-certified RX office case client management system. And there are different ways you can utilize that. Many license it directly as an intermediary or as an agency, but we also have a limited usage license. So for instance, as many of you may have attended the Wells Fargo rollout of this platform, you don't have to be a full licensee of RX Office to work with Wells Fargo. You can simply get a limited usage license to work with just Wells Fargo. And of course, it would limit the functionality to that servicer and to their particular case type. And again, another key feature of this is that there are workflows. So if it's a Wells Fargo workflow or a Penny Mac workflow or a Caliber workflow, document set, Fannie Mae, Freddie Mac, all those rules are configurable. So you're really working very intimately with the other side regarding the data, documents, information, and cycle times to fulfill their needs. And also, if a housing counseling agency has a proprietary system or a commercial CMS, we can interface with our open APIs so that if your group wants to maintain using your system, that's not a problem for us. We can just interface via APIs. Up in the left-hand corner is the homeowner. Many of you already have the client-facing portals for your case management systems. We also have one that can be adapted and utilized so that the consumer is working with you via the web. Our application is mobile friendly as well, so they can use it on their smartphones. Down in the left-hand quadrant, of course, is either a servicer or a lender. And as I go through the presentation today, I'm going to cover a few of the specific engagements that some of these servicers and lenders are putting into the industry that require assistance and involvement by housing counselors. And then down in the right-hand corner, we have state housing finance agencies and investors, again, for business activities related to housing that require or allow for housing counselor participation. You were talking about the Homeowner Assistance Fund. Our technology supports Connecticut's Homeowner Assistance Fund. We have the technology from the initial application process, consumer facing, all the way through processing, underwriting, and the payment processing to the servicer on the back end. And that's been helpful to us in many ways, particularly in improving the technology. So this, again, this is the view from the drone on how this works from an architecture standpoint. Next slide. So the very exciting emerging opportunity is our NHAP fee for performance programs. And I say our programs, they're really the lender and servicer programs. But what the role that we play is simply bringing all the parties together on a seamless technology platform. And if you think about it, one of the big barriers for more of these programs has been a technology interface. A servicer many times will shun doing a program like this because they have to work offline on spreadsheets, even using secure emails now or dedicated fax lines present some growing risk problems. I think that's why, one of the drivers of Wells Fargo and their recent announcement, requiring everybody to submit workout packages through this portal. All those factors kind of militate against the servicers and lenders being more creative and really fully appreciating the value that housing counselors can bring to the business. And so what our technology does is kind of breaches that technology gap by allowing people to collaborate seamlessly. So I'm going to cover kind of the servicing engagement in a general way, and then what we're doing on the front end. So first is a traditional foreclosure alternative counseling, which we're all familiar with. And that's a counselor working with a distressed homeowner to gather information, then submit a borrower response package. I know it's called many different things, but we'll use the GSE term right now. And then also post-modification counseling. So that's gaining more growth over the last several months. I think I note that many of the investors, capital markets are anticipating some type of downturn, and they're provisioning now to be able to handle what could be some challenging times for homeowners, despite the good news that there's a lot of equity, that the loans in this cycle are much better than they were during the Great Recession. But at the same time, there's more pressure on people economically given inflation and other factors that are making an impact on the cash flow. Another interesting program that we are supporting is several mortgage servicers and investors have implemented borrower outreach. Now, I know a lot of you do this work for different servicers, but we've now incorporated this into kind of a standard model on our platform, and we have a pretty successful pilot program now in about its 5th month. We'll be releasing some data on this by the fall. But essentially, a major non-bank servicer is picking high-risk borrowers in various geographic areas and then pushing those files through our platform into work queues on our system to a pretty large intermediary that's working on the pilot with us. And they're paying fees for different results, including even equality right party contact. And I'll go into a little more detail that on the next slide. On the front end, we've got a module we call Home Prep, which is really a way for counselors to provide not just the standard pre-purchase counseling, but kind of what we call mortgage readiness, which is working with folks who are socially disadvantaged or low to moderate income or in underserved markets to kind of curate them and get them to be eligible homeowners. But more than that, it is bringing together the various affordable programs into the platform that will be presented to the housing counselor working with that potential homeowner. And again, I'll go into a little more detail in slides upcoming. We also are integrating service providers so that the work that the counselor does with the potential homeowner or even the distressed homeowner on the back end will have more tools to provide a richer experience for the customer and provide a more valuable deliverable to the servicer who is paying those fees. Next slide. So not to get make you dizzy with these flow charts, but I thought it'd be important, and I think this will be available for review later. But this is just a model of the workflow for the foreclosure alternative counseling and BRP submission program. So this shows how a counselor submits a package through the platform. Now the servicer portal is licensed by a number of servicers. And remember, they have their business rules, investor-based business rules built in. So it's more than just exchanging documents. It's got the workflow and business rules incorporated. And we use a convention we call case type, where we're able to provide very specific workflows, unlimited number, based on the requirements. If you go down below in the rectangles below, it gives you a little more description of what's in that servicer portal for the servicer to utilize. Talks a little bit about some of the compliance that works to their benefit. And at the end of the day, it's all about the consumer. They're going to have a better response. There'll be continuity of communication. You should have a happier client and get a better result. The rectangle to the right describes the servicer interface option. So remember, now this is the big hurdle that we're overcoming. So the servicer can think about if the servicer is licensing the servicer portal, then they can work with any other counselor who is also on the portal seamlessly. So it's kind of a plug and play. So they don't have to devote resources, vendor management, oversight, onboarding, which are all, prohibitive for these programs. So we kind of eliminate those barriers. And so we go back to that rectangle on the right. We can interface with the servicer either directly to their system of record. We integrate with doc management systems, or some of the servicers, they may just have a handful of cases, but they devote a team, to work directly in the servicer portal. Now here, I think, is the real excitement for you guys. And that's this developing fee for performance model. I think one of the things I've learned in working with your profession is that you're overworked and underpaid, and I don't think anybody really appreciates the value you bring. But I think that's changing. And one of the ways that it changes is that we're able to design a model that identifies and quantifies value for the servicers and lenders. And so let me explain that in a little more detail. The industry recognizes the importance now of making what's called quality right party contact. We have built into our system the GSE Fannie Freddie requirements for QRPC. So if a counselor is working with a consumer who needs help, and they get enough information with that QRPC, they may not lead to sending a complete package in or doing complete counseling, but that's valuable information. And if that's submitted through our system into the servicer, they will pay for that QRPC. Not everybody, but we've got a couple doing it. And one of our goals is to keep working with industry groups like NHRC and some others we're talking to about saying to the servicers, you know, we have a way of quantifying our value. There's a standard way you could all work with us. We've got standard identifiable value packets, and we can become an integral and integrated part of the industry. And that's really the thesis of my presentation today, is integrating the housing counseling industry permanently as a full and viable participant and stakeholder. They'll pay for complete BRPs, as many of you know, or may be experiencing. They'll also pay a bonus fee for a successful trial mod. And then many servicers are paying for post-mod counseling. All that functionality is built into this platform. Next slide. So let's talk about the front end of affordable lending. There's no shortage of programs and emphasis in our society today, and legislatively, from the states, from the federal government, corporations, foundations are all pushing to expand homeownership, which we support. And what is BRP is a borrower response package. So I saw that question pop up. It's basically a loss mid package. So we're excited about the wave of efforts to increase homeownership, particularly for disaffected groups in our society. And we've put together a module we call Home Prep, and we have 2 pilots up and running. We'll have some results before the end of the year, but it's very exciting. And I have to say that I think this integration of housing counselors and these models will prove to give a real impetus to expanding affordable home ownership. So the 2 pilots are, one with a mortgage banker, a national mortgage banker who specializes in affordable programs. The other is with 2 mortgage broker groups, and they also have access to affordable programs. A lot of what our platform is doing is we're writing algorithms so that we can match the particular loan program or programs with that borrower and the housing counselor representing them. You know, if it's in a geographic area, and it might be dealing with a community investment program or a housing finance agency program, where our algorithms are able to match those up. So that's really the real kind of blood and guts of this whole program. So just mentioning a couple of the other bullet points. Again, we're tying disparate parties together: federal, state, investor, local affordable programs, and providing these integrating tools. And at the end of the day, we envision an end-to-end model. That's why I mentioned that 3rd bullet point. So we're already working with Freddie Mac, bringing in their loan product advisor score, being able to pull that in all the way into our housing counselor module, so that you could actually present the score from home coach. Is it an accept, needs work, or decline? And then based on that score, you can continue to work with that consumer to get them to an eligible level. And the importance of this also is that when that data packet is sent over to the lender, they'll know that if they can sell that to Freddie Mac. And of course, we're going to be doing the same thing with Fannie. They're going to be a fast follower on this, but they have every intention to do the same. It just will probably happen a little later in the year. And here's another key: it's all about standardization. pricing, workflow, data, documents, counseling protocols, certifying compliance with HUD, federal and state regulators. All this is into the mix. And again, the exciting thing is that the pilot programs are really being aggressively pushed by the lenders, and they're the ones paying the freight. They're the ones trying to make the loans. And that's why I think there's a high degree that this will be successful. Next slide. All right, so here's a graphic representation of really what we're trying to do is create a discrete origination channel for affordable mortgages involving HUD certified housing counselors. So again, many of you are doing this type of work with individual lenders, but all of it's offline, and we're trying to create a standard technology, again, plug and play. So here is just one model of how this will be working in one of our pilot programs, and it shows a prospective home buyer engaging with the counselor. Now this home buyer could come in, as some of the bullet points mentioned, either through co-marketing, or it could actually be someone who has been declined or is ineligible and is asked if they want to opt in to getting remediation so that they can become eligible. So there are many ways to trigger one of these cases for HUD certified counselors. Once the borrower is taken through and now becomes mortgage ready, and again, that can all be calibrated. We have different benchmarks that can be set for FHA loans, for different loan programs, doesn't matter to us. They then will go back through the National Housing Advocacy Platform, and depending on the counselor will actually be presented with at least 3 possible mortgage programs by at least 3 lenders. And once the borrower makes that selection, the data packet is sent over to that lender. And we're actually integrating with point of sale systems on the lender side. So think about it. As a counselor, you're staying in one system. You can work with any prospective home buyer, get any program that the lenders who are participating offer that's tailored and is the best program for that profile. And everything is seamlessly, securely, transparently submitted to the lender. That lender will then report that status back through a dashboard that the counselor has to say, oh, it's under review, it's being underwritten, it's approved, it's closing. As we're working on the fee structure, we haven't have all that worked out yet, but I can tell you it is a healthy fee for delivering a mortgage-ready individual. And we're kind of working on, technically how is that done through the system and kind of the logistics right there. But as you see these bullet points coming through here, they kind of encapsulate the major features of how this program will work. And I think we'll probably be ready to go to a broader market by the fall. Then the great thing is we're actually also working with the CFPB, where in one model we may need the no action letter, although that no action letter process is going away. We got under the wire to get one for one of these programs. But again, the good thing is that we've got the lenders working directly with investors, with housing agencies. Remember, they want to make these affordable loans, and all that we're doing is building a technology model that allows any HUD certified counselor in the country to play along and make a fee associated with delivering a mortgage ready individual. So hopefully, in a couple months, even if I don't get my coffee cup, Bruce will have me come back. I can give you guys a really good update on this and let you know where we are. Next slide. That's it. some great pictures of some good looking people here. And I finished my presentation, and I'll be happy for Christy to throw some questions at me.
Thanks. I think actually it'll be Ebony who's throwing the questions at you, but Ebony, have you
Anybody.
got questions in the queue?
No, we decided on Christy.
Okay.
You did. Oh, okay. Sorry about that.
That's okay.
So thank you for that presentation, Cam. It was really detailed and helpful. So yeah, let's go through the questions. So someone asked, is there a straightforward way we could learn about the system, question mark, from the HCA perspective? Question mark.
Yeah, absolutely. I will get I'm sorry I don't have it, but we'll give you, I can give it to Christy. Maybe then you could share it with everyone afterwards. We'll have a link. You can literally sign up for a demo and discussion that I'll be on. And, we can go over any of the programs, or just how to get, here's how you could get in and be ready. So absolutely, we just need to schedule it.
Okay, wonderful. I just replied that we'll send him a link. Okay, and does this portal replace counselors having direct contact with servicers and lenders? And is there a fee for service provided to lenders and servicers?
So make sure I understand the question. Yes, it can. It doesn't prohibit counselors from interacting any other way they choose, but yes, it's a way to standardize that interaction. And we use and I could speak about Wells because they've announced it to the industry. So with Wells Fargo, you have to use this platform to get their fee for submitting a modification for those who are in that program. I know it's not every counselor, but there are a significant number who have to utilize it. Now there's some other programs coming out. I just don't have the authority to release the name at this point, but this is a fastly emerging change in the industry, these fee-based programs. And one of the big reasons is because if you have a standard platform, everything's transparent, it's very secure, because we have to meet the standards of these banks. And you have really good metrics to evaluate, right? You can slice and dice many things in one place. So you don't have to do all this, you send your reports in, I send my report in, and it's delayed. So there's very dynamic and flexible reporting. So I think that this will only get better. And I think within a year and a half, this will be a standard operating, and it's really about the housing counselors and the consumers they represent. I mean, I'm happy to have the technology, but it's long overdue. You guys do great work, but you have a lot of barriers because of lack of technology connecting everybody.
Mm-hmm. Yes, and someone asked, how many servicers have signed up?
So for the full loss mitigation package, we've got 6. For other modules, we have about 40. So one of the things I'm trying to do, and I actually would love for your help, your counseling industry, is going to these servicers and recommending that they adopt the servicer portal. It's very, very inexpensive for them. I think with Wells adopting and some other big names coming out, I think we have some real momentum. But I've talked to some of the intermediaries and other advocacy groups like yourselves about, let's go to a couple big ones that will really have an impact. If you get the top 10, you've got probably 45, 50% of the market. So we're on our way. Caliber's on board. They'll be expanding to the new res as they're just kind of coming together operationally. So they'll be the biggest, probably the second biggest non-bank servicer. So it's a campaign, but we'll get there.
Yes, certainly. And someone asked, Cam, can you provide contact information?
Yeah, I don't know why. That's great. I spent all that money on all the time on the deck. I didn't put my name and email. So yeah,
No worries.
you have it, Christy. You could put it in the
Mhm.
chat box.
Yes. And then the next question is, which servicers have signed up to exclusively use and NHAP for BRPs? I see a number of large servicers using their own portals for application submission.
Yep, and you're absolutely right. So we've got, like I said, 2, 3, 4, 5, 6 right now. So yeah, I mean, we've just got to keep working on getting more signed.
Mhm.
Actually, when you go on our, if you go on our system, the drop-down list for servicers will have those in order of those that are actually participating in what program they're participating with. So.
And then the next question is, what measures are in place to prevent predatory lending investors? Is this tool/platform available to all investors? What tools are in place to prevent one-sided or discriminatory steering?
Yeah, so there's a couple things about steering. Number one, this is limited to affordable programs. So it's specifically with lenders, originators who those are the only programs we're going to have in the system. We're following the anti-steering protocols, which is that every consumer will have at least 3 offers for you as the counselor to review. And that's what I showed in that one diagram. It showed 3, it could have 5, but so the model absolutely has those provisions. Yep.
Okay. And someone asked if, is there a list of lenders and servicers on board with this great program?
Yeah, on our site. Yep. And now on the origination lender side, we're just rolling out the pilot. So it's in the pilot stage. That's what I was saying earlier. Probably about in the fall, I would say October-ish, we'll be expanding. It's a more complex model, as the prior question presented. There's more regulatory features to make sure we embed. So it's going to take a little longer, but it's on its way. Yep.
Wonderful. And the last question on the chat box is, are you working with the NFCC?
I don't. No, I don't think we are. No, I don't think so.
Okay.
Trying to remember, it's too many alphabets. NHRC, NFCC, NRC. I don't know. I don't think so.
Okay.
I'll have to check.
And then someone asked on the chat, what regulatory challenges present with this model?
Yeah, well, again, Respa, but I think that, I mentioned, and I thought I saw one question pop up about the no action letter is being decommissioned, so to speak. And what it's being replaced with, you've got to request a rule change, right? Then that, if you go to CFPB website there, and there's a lot of articles about, they did an announcement. What I do think will happen, and Bruce may even know more about this than me, but is that they'll come out with a rule, which they should, and not have these one-offs. I never thought the no action letter was a great idea because they're all one-offs. And I think if you read the CFPB's rationale for doing away with that, people were taking advantage of it and using it as a marketing tool, saying, hey, we've got a no action letter. And that really wasn't the purpose. It was more of a kind of a safe harbor, but not running around bragging about it and kind of inflating its value, right? So I do think, my understanding is that, may not be till the end of the year, but they will identify this fee for performance. The real key is that the fee is equivalent to the work. So that's why, it can't look like you're getting money for referring. You're getting money for work, for getting somebody prepared, right? For the counseling, for the mortgage readiness, helping them get educated. So I think once that kind of clarity is codified, and this pilot's going to help do that, right? And I think that's the idea. At the end of the day, this should be just like anything else. And I'll mention one more thing. I don't know how we're on time, but I am putting together a white paper, and I've already talked to both Fannie and Freddie that the way to once and for all make sure counselors are fully integrated is to have a fee structure and I was talking a little bit about it earlier, where you get, QRPC fee, right? You get one for a full package. You get a fee for success, trial mod or anything really, deed in lieu, just like the servicers get. And finally, post mod. Now, the way to make that work, because I always think operationally would be Fannie and Freddie would make those fees a reimbursable expense to the servicer, just like they do now for property inspections, for BPOs. So why not at the end of the day have a standard fee structure that brings value, that helps people, and then operationally, Fannie and Freddie would say, servicer, you advance that, and then you submit your claim, and I reimburse you just like I do for everybody else. Because the way I think, beyond strategically, is that you can have a great idea killed by a bad process. So if we can figure out a way to, once we prove the value, which I think you guys have proved the value. I mean, there are all types of studies and statistics showing the positive impact that counselors make on both ends of the spectrum. And you've proved that. Now, how do we go back to my mission statement here? How do we integrate counselors into the servicing and lending process? At the end of the day, with the GSEs having most of the loans and in the country, that's the way to do it. A policy change like that. So that's not going to happen tomorrow, but I'm working on it now. My background, I was the head of policy at Freddie Mac at one time. I worked for Fannie Mae. I know how they operate, even though it was in the Paleolithic age, 25 years ago. But to me, that's the end game.
So let me just jump in on this no action letter question. So for people that aren't following this super closely, so the whole question is, can you get paid for housing counseling services and not violate Respa? And the whole idea is that it shouldn't be a referral fee. As Cam described it, it should be a payment for services delivered. And that seems genuinely obvious to us, but in fact, it's not how it's been interpreted in the various versions of the CFPB. We had a pretty clear plan for how this all worked when HUD was managing Respa, but when it traveled under Dodd-Frank to CFPB, we kind of started from scratch again. And unfortunately, there were some lawsuits involved, not involving housing counseling, but involving the question of services being delivered at the time. And so we weren't able to really iron out the issue that we should be viewed as a service. That was under the Cordray administration. On the Obama era, Trump comes in, nominates Kraninger, and she's the CFPB director, and they do this no action letter. And so the idea is that it's a place where regulations don't apply. It creates a safe harbor or safe space, play in the sandbox. They wanted to do it for fintech companies. A lot of consumer opposition to that. But we did see this as an opportunity to try to create a clear path for housing counseling. So rather than having just a no set of regs at all, essentially HUD with Sarah Jarik and CFPB worked out a plan that implemented the old HUD regs. So 3 lenders and disclosures would be acceptable for getting payments to housing counselors. we had assumed that lots of lenders would jump on this, only 2 did in the end. And others were still nervous about it. And then again, a new generation comes in with the Biden administration, and Rohit Chopra is the new director, and he has deep resistance to this idea of safe harbors. And so they have told us that there won't be any new no action letters, and that they would not be sympathetic to more lenders coming in under the existing no action letter. So that's kind of where we're at. There's some possibility. So a rule change can take a couple of years to get into place, and is kind of a rocky path, so it would permanently solve this problem. There may be some more temporary things that could be done, but it's not as easy a path as one would expect, given how straightforward our situation is. And part of it is to do with lenders being very, very nervous about regulatory oversight. But many of us are working on these problems, and there's some good faith efforts on the lender's part, we think, right now, and there may be better news in the next few months. And we are working with CFPB to try to figure out a better solution. But there is no clear path yet. We're still working on it.
So we have more questions actually were added to the Q&A box. So simply put, NHAP serves as a mortgage broker for pre-purchase counseling. Is that an oversimplification?
Yeah, I wouldn't call it, I wouldn't say that. I think that the accurate description is that it's simply a technology platform that supports people working together, and it depends on what programs people want to work on that we can support, in the housing, and the stakeholders that need our functionality: servicer, lender, investor, Fannie, Freddie, housing counselor, consumer.
But could I follow up on that question? I think there is something that we should probably be clear on. So if a housing counseling agency submits to the platform, the only lenders that they will see are the participating lenders in NHAP. So if a housing counseling agency has a relationship with a number of lenders, if they aren't necessarily on the NHAP platform, they won't see the offers from those lenders. Is that
correct? All that they would have to do is get that lender to join, to sign on.
Right.
In fact, that's kind of the way we've got some lenders in queue recommended, that are working with our pilot counseling group right now that we're going to be adding on. So.
And the next question is, regulations require lenders to send out letters. So do the servicers let them know to contact housing counseling agencies?
Yes. And in fact, I think you'll see more robust marketing by the servicers who are participating in NHAP in terms of letting the consumer know, and even encouraging many times to go to a HUD certified counselor that's working with that, that's on the NHAP, because that's the idea that they can work seamlessly. And particularly for the outreach. So the program we have with one servicer and a counselor, they do co-marketing, and they pick specific geographic areas, and they actually filter their portfolio. So for instance, last year, they were focusing on consumers who had not responded to forbearance offers, or those who had started but didn't finish. So they really went hard after these people, and they were just thrilled with they had about 20 to 25% response rate, and they never expected it because they had tried everything. But by using community-based housing counselors, the people responded. And then what would happen, the way the model was set up, they could even do a hot transfer. So if they had that consumer on the phone, the consumer said, yeah, I'm ready to go. Could you get me to a a person at the mortgage company, bang, hot transfer. They start the workout, they report back through the platform so that the house council will get credit for that. So it was pretty cool. And we want to expand that now that we have a good amount of data. Like a lot of things, some servicers, everybody has a different business model and risk tolerance, but I think what works in our favor is that the CFPB has been pretty strong about doing everything possible to have effective outreach. And part of that is using housing counselors. So.
Another question that was inserted into the chat box actually is, can local lending programs be included, or would those programs have signed up through NHAP?
So yes to both, right? I think it's basically what Bruce was asking. If you are part of NHAP and you could show it to your lender and they could say, wow, that's pretty efficient, right? I don't want to get spreadsheets. I like this. And depending on their size and what they're using, what their system is, it could be manual. We can do, again, we're a tech company, so we can interface from uploading spreadsheets, batch to APIs with their point of sale, their CRM. So it doesn't matter to us. But the idea would be that, yeah, hey, you could say, take a look at this. We'd be happy to do a demo. And if they want to join, they could join and get their programs built in. And the other thing is that this is where it gets really interesting, how we're building the algorithm so that the programs that are and the lenders relevant to you as a counselor in your area, we can mix and we can match those. That's the work that's the magic that the technology, not magic, but those are the things that we can program, right?
And someone just posed a question on the chat or a Q&A box. The question is, what does Indysoft do with the home buyer's data? Do they sell it to a third party?
No way. No, we're not like some other people. No, absolutely not.
Great.
It's not our business plan.
I believe those are all the questions. Anyone can weigh in if I missed any on either boxes, but yeah.
I just wanted to clarify for Cam that NFCC is the National Foundation for Credit Counseling.
Oh yeah, okay.
And I'm not sure the reason for the question, but they're like a trade organization, membership organization for credit counseling groups.
That was Rebecca Steele.
Yes.
Yeah. Yep. Okay. Yep. Got it. Thank you.
All right. Well, thank you very much, Cam.
Thank you.
And glad to have you here. So let's quickly wrap up here and remind people that our 10th anniversary, and now is the time to join NHRC or renew. Ebony is working on our membership, so if you have any questions, please shoot them her way. And we have our CoreLogic Credco credit report discount. We have a discount with Savvy, but the main thing is really to support. When actually we do these notifications of interesting funding opportunities too that comes to counseling agencies that you might not have heard of in other ways. But the main thing is really to support us for the advocacy work we're doing, it really trying to pull the housing counseling world together and to help build it both financially and organizationally in policy networks and outreach and in performance and everything we can to be helpful. So with that quick note, I want to thank everybody. Oh, and it's our 10th anniversary, so please feel free to respond on the video and give us your best memories or opportunities or visionary statements that would be helpful, and we will figure out how to put these in some format that will allow people to see them and enjoy them. And would like this to be a little bit fun, but also, celebratory. Okay. So with that good news, thanks for everybody for coming. Here are the email addresses of our staff, and thanks for a good session.
Oh, before you go, I'm sorry, quickly, before everybody leaves.
Good.
There's Christy is putting into the chat box links for our next couple of webinars, and the next one is next week, and it's all about accessory dwelling units, which were included in the president's affordable housing plan. So learn about ADUs next week, and the one after that I'm blanking on. I'm sorry. But the links.
Appraisal bias, is that it?
Appraisal bias, yes, thank you. Dealing with appraisal bias. So the next two, those next two sessions are coming up.
Yep, lots of good stuff. And let us know if you've got some thoughts about webinars we should be doing. We want to be helpful to you. Great. Well, thanks, everybody.